Today on the CEO Attorney, economic injury disaster loans and PPP Paycheck Protection Program loans. How do they work together? If you got both of these loans, you're going to want to hear this. The Economic Injury Disaster Loan Program, known by EIDL, is administered by the SBA directly, unlike the PPP, which is administered by banks. And basically, the deal with the EIDL is that this was the first loan that was available to businesses that knew they were going to be shut down when state governments began declaring emergency orders. Many business owners went onto the SBA website to fill out the very brief form. There was also an option to request a $10,000 advance at that time. In fact, one of my businesses filled out the form. I remember it was only maybe 6 or 7 different items to fill out. One of them was go ahead and fill out your checking account information so that we can make a direct deposit into your account. And there was a checkbox. Do you want to get a $10,000 advance? If you were like me, you said, yeah, I'll take a $10,000 advance. That sounds great. I have no idea what's about to happen with the storm that's on the horizon and the business being closed for an unknown period of time. That was the case in March anyway. The economic injury disaster loans, unlike PPP loans, are not forgivable. However, $10,000 of an advance, if you receive the $10,000 advance, that's free money. It's treated like a grant. But you can't get both the $10,000 advance and the PPP money forgiven. So what do you do if you received both the PPP loan money that you're expecting to be forgivable, and then one day $10,000 or whatever amount, if it was less than that, just magically showed up in your checking account? What do you need to do if you've got the PPP loan money and you've been visited by the EIDL loan fairy? What will happen is you're going to have to pay back that $10,000 as if it's an unforgivable part of the PPP loan. So when it comes time for you to calculate your loan forgiveness at the end of the PPP loan period, you'll just know that you're going into it with $10,000 that's not forgivable that you're going to have to pay back. Let's give an example. Let's say you got $30,000 in PPP money and you got a $10,000 grant that magically showed up in your checking account one day. What will you do? How do you handle that? Well, assuming that you were able to cross your T's and dot your I's and have total forgivability of the $30,000 loan amount, you're still going to have that $10,000 loan outstanding. You add that on to the amount. So you're going to pay the $10,000 loan, $10,000 EIDL grant back under the PPP program as if it was an unforgivable portion of the loan. So that's the way that they're going to handle it. You just need to plan to pay that back. It'll be monthly payment. I believe 6 months after your disbursement of PPP loan funds that you have to begin paying that back. So it shouldn't be a problem for most businesses, but it will be a problem if you didn't know you had to pay it. So keep that in mind, and if you have other business owners that you know have PPP loans and EIDL loans, this is something they're going to want to know, so make sure you tell them. That's it for this episode of the CEO Attorney. We'll see you next time.